Welcome back to Lamb's Cryptoverse. Today I want to talk to you about how low can Bitcoin go. Now, a lot of other analysts, YouTubers, people on Medium have already talked about this, but I want to bring in my slant from traditional finance and from all the other indicators that I use outside crypto and even within crypto, just to bring in a new perspective. But I'm coming to a similar conclusion. Well, their conclusion is that they're not really sure, but there is a chance that Bitcoin could decline more. My conclusion as a risk manager is that we're around $20,000 now in Bitcoin. I think we could go down another 50%. But then at that level, there's a lot of resistance, there's a lot of strength, I should say, a lot of support at that level. But let me tell you why Bitcoin could move and the probabilities of it and whatnot. Let me just show you some charts here. The first one is obviously Bitcoin. Bitcoin, as I'm speaking, is trading at $20,183. It's up today, which is pretty good considering that the NASDAQ is down. So look, if you look at the Bitcoin chart, it's gone down quite a bit. We were around 66,000. Right? Some people say the top was in April. Some say it was in November. For all intents and purposes, I'm gonna say it was in November. So the high was around 69,000. I think it closed around 66. Let's say it closed at 66 and now at $20,000. That's like a big decline. That's around 70%. But Bitcoin has declined more than that historically. So if it's declined more historically, there's a probability that it could decline more. And I would argue it could decline more for another reason. If you think about it, Bitcoin was born. It actually Mr. Satoshi Nakamoto gave birth to Bitcoin in 2008. 2008 was the depths of the great financial crisis. We all remember the crash and burn. Well, maybe not of Bear Stearns, but of the crash and burn of Lehman Brothers back in October of 2008. And beginning at that time, that's when the Fed really started pumping liquidity. And this time around, beginning in 2020, they had a quick response to this financial crisis. They pumped liquidity at the greatest rate in history, even more than during the Depression of 1929 through 1932. So because of that intense money printing, right? It's not just lowering of interest rates. It's a quantitative easing via money printing. I believe the balance sheet of the U.S. Federal Reserve went up to $9 trillion. And we printed more money in the last 2 years than we printed in the history of the Fed. So because of that, Bitcoin and other related assets like long duration assets like cloud companies, SaaS companies, those prices went up higher than they would have gone. So I would argue just for that reason alone that the recent 70% decline in Bitcoin prices is not enough, that we could go lower. And we've gone lower in the past. And I'm not going to dwell too much on this, but I'll just show you back in 2018 here, I think we hit a high of $20,000, and it went down to about 3,000, and that's maybe 3,500. That's more than 70% decline. That's more like 85% decline from the high. And that's just another example. But I also want to bring my traditional finance background to get a new perspective. And I've got my notes here. And I did some research. I have a book. I don't have it on me in front of me, but it's called Panic Profits. And that book went through every bull market and bear market going back to the 1800s. And I noticed there were some markets that were similar to what we have in crypto. And these are markets where we had like new technologies, like the trains, planes, and automobiles, I should say, just like the movie. And we've had technology stocks, right? The internet. So these were unique changes. They weren't just bubbles like the tulip bubble. the tulip bubble everyone talks about, I think the tulip prices went down 99%. I would include that because that wasn't a real change in technology, right? The black tulip wasn't a change in technology. It was just a speculation. So I'm talking about bubbles created from changes in technology. And if you look at some bubbles, I'm reading them off to you, the tech bubble, the internet bubble, that when that crashed back from 2000, 2002, it declined 90%. So I think that's a good benchmark to use. Let's see what else I've got here. And depression. We had a lot of new technologies in the 1920s, and that the depression and stock decline thereof also declined 90%. So you're seeing a trend here. When we had big declines, especially after big technology innovations, they've declined 90%. And then during the great financial crisis, the Dow declined 55%. I'm not sure what the NASDAQ did, but obviously the NASDAQ declined more than 55%. So let's say it declined between 55 and 65%. And remember, the great financial crisis of 2007 through 2009, you picked a date, it was more in the banking sector, and those bank stocks traded in S&P and Dow more than the NASDAQ. So it was more of a Dow issue versus Dow Jones issue rather than a NASDAQ issue. And then I want to give other perspectives. And this is, I don't think we can have the end of a crypto winter unless the market becomes efficient. And what does that mean? It means that shit coins like the ones that you know, name your favorite coin like Dogecoin and Shinobu and even Ripple, these coins are moving similar to other crypto coins. So that should not be the case. They shouldn't just be declining at a similar rate to what Bitcoin's declining and Ether is declining. They need to decline more and they need to disappear. It's been said that we have like 19,000 coins and that most of them are going to go down to zero. Well, guess what? Most of them have not gone down to zero yet. So we're still early, believe it or not, even though this crypto winter feels like it's been going on for years. It's not been over. It's not over because it would have been marked by many coins, shit coins, going down to zero. So we have not seen that yet. And also, I did some videos on production cost. Production costs could go down a lot lower. And if you think of production cost as energy production cost, and I did a whole video on that, how production costs in Bitcoin mining are similar to energy, you'll see that production costs can go down, I think, to $10,000 to $13,000. And if it can do that, maybe it's even lower, but if it can do that, that means that Bitcoin prices can go down lower. And remember, a lot of these Bitcoin mining companies, they have cash on their balance sheets, they have crypto on their balance sheets. So even if they're losing money, they can still survive another few months by selling their crypto or using the cash on their balance sheets to fund themselves. But now I want to show you some on-chain metrics that other YouTubers are looking at, and I like to look at too. This is one of Willy Woo's favorite ones. This is the Maya multiple. And if you look at the Maya multiple, you want to buy Bitcoin when it's below the green line. But you could see, so we are below the green line here. But if you go back to 2012, we were much lower and we stayed lower. And you saw that in 2014, 2015, and in the bear markets of 2018, 2019. So this indicator is somewhat bullish. I would say it's even bullish, but it can go lower. So let's go to the next indicator. This, I should have said, is Willy Woo's one of his favorite indicators. He uses this to detect tops, but you can also use it to detect bottoms. And it's at a bottom when the bar chart here is green, But you could see in crypto winters, the bar charts have been for a much longer period. And look at 2015. This bar chart lasted from January 2015 all the way to July 2015. And the same thing with 2012. It was a long period of time. And if you look now, the bar chart only started becoming green in July. So it's been a recent event. So if you carry this out, you can see that the price of Bitcoin at 20,000 could go a lot lower, because you have to remember we have to grind lower in order for this bar chart to stay green. So I'm thinking just in this chart alone, you could see at least another 30-40% decline in Bitcoin. Let's go to the next one. So I'm speaking fast, but there's a lot to talk about. This is the Bitcoin top cap model. This also might be a Willy Wolf favorite. And if you look here, we haven't reached the blue line yet. That's the average cap. We have not reached that level yet. But if you look back, and let me fix this for you so you can see it. If you look back here, again, at the 2015-2016 period, we were a lot closer to the blue. And if you go back to 2011 and 12, we went below the blue line, which is average capital. So if you just bring that price out, bring that price out down to the blue line, you can see that Bitcoin could go much lower, perhaps to $10,000, even lower. And this chart here shows Bitcoin circulating supply, and it's looking at a log price. It's for the Bitcoin price, looking at a log, and it's looking at a linear price for the circulating supply. And if you can see here that today's Bitcoin price at 20,000, or even here it's 20,177, it remains above the yellow line of circulating supply, and we've gone lower in 2020, we went lower in 2019, and we went lower in 2015, and we remained lower for years, all the way up to June 2017. So that was a long period of time. And the same going back here. If you go back to October 2011, we broke the yellow line, and we stayed there all the way to 2013. So if you, again, bring out that line, you bring the price of Bitcoin below the orange line, you can see we can go a lot lower, maybe to 8K, or maybe even lower to 6K. So I interpret this as a bearish reading, because like I said earlier, we can break this orange line, we could stay much lower. Let's go to something from Crypto Quant. Crypto Quant has open interest. This is moderately bullish. You could see that open interest decline. So Bitcoin doesn't hit bottoms until you get a good decline in open interest. However, I think we could go lower in open interest. It could definitely go a lot lower. So I think this is moderately bullish. And why do I say we can go a lot lower? Because there's another way of looking at speculation, and that's looking at this. This is the leverage ratio, and we just hit an all-time high. I find that hard to believe that we hit an all-time high of 35% in leverage when we had so much going on with the crash of Terra Luna, the bankruptcy of a major hedge fund and 3CA, and bankruptcy of Voyager. And still the leverage ratio went higher to a new high, all-time high, meaning people still speculating. And also, if you look at the futures exchange, there's still a lot of open interest in futures. Now you might say, why do I think that leverage is too high? Maybe people are taking bearish positions. I don't think that's the case, because if you go to Deribit and other data sources and you look at the put to call ratio the put to call ratio for Bitcoin is at a fairly low level. It's below 0.4. If you look at the Ethereum's put to call ratio, it's below 0.25. That's one of the lowest readings on record. So that means that everyone and their mother is buying call options. That's why the put call ratio is low. And if they're bullish in options, you can derive that they're also bullish in other forms of derivatives. So that's why I think we could go a lot lower in Bitcoin. And I failed to mention one thing, so I'm going to go back to the first chart. And it's that we have a lot of resistance. I want to highlight this and expand. Let me expand. Let's go to the 2-year chart here. And then let's go back. And you could see here, there was a lot of support around $10,000 and even down to, let's expand this so you can see this. That's about $9,000. So I think there's a lot of support in a $9,000 to $10,000 level from a price point of view. So obviously if we're at, let me just go back. Let me give you a long-term chart. So obviously, as I said, if we're at 20,000, there's an air gap and we can go much lower to 10,000. And remember this, the stock market is not down much from its high. And Bitcoin and crypto assets overall have a high correlation to the NASDAQ and to the S&P. So if they do, and you think the stocks are going to go low, as I do, then you conclude that Bitcoin's price could go much lower. Again, I think we could go down another 50%. Well, thank you all for listening to Lem's Cryptoverse. Please subscribe to us and like us if you want to see more videos like this. Bye-bye.